afternoon, everyone. Good afternoon, Balaji. He's had a long stint on the road. He landed up at Whitefield, Sheraton. And he's dived out of the car and gotten straight to the stage. So, thank you so much. So, jumping right in the interest of time, we're here to talk about the rise of fintech. And I think what I would really, want to talk about or ask you is that we've seen an explosive, growth in the fintech industry. So, what do you think, in your view, has made this possible, and where do you see it going, and how is the narrative shifting?
Thanks, Ritu. And my apologies to the audience for the late entry. As Ritu said, I went to Whitefield and came back all the way. I'm glad I could make it in time here. Uh, a little bit of a zoom out perspective to your question, Ritu. When I came back from the UK to settle back in India in 2013, about 12 years ago, that was the start of the GCC and the fintech revolution in India. And the two revolutions have gone in parallel. Now, this is a very distinguished and qualified audience, and you must have heard from other speakers today. The drivers are well known. The India digital stack, which is an absolutely world class stack, the mobile revolution, the 4G and 5G revolution, and the regulatory support. I know the previous speaker had a different point of view about regulations, but I must say, at least in the banking sector, for instance, regulations have evolved in a very enlightened manner to balance opportunity and risk. And things like video KYC, as an instance, right? This was not possible 8 years ago. Today, you can do an entire account onboarding on video. Regulatory support and building ecosystem rails like what NPCI has done. All of these factors have combined to create a very sweet spot for the rise of fintech in India. And this will continue. There are very different projections for how big the industry will be by 2030. They're all massive growth projections. So the growth by itself is no surprise given the demographics, the economy, and all these factors. But I also think the emphasis has to start moving away from looking at the opportunity, because that's crystal clear, to have a slightly more clear-eyed view of the risks involved in this. And the reason I want to emphasize this is, India is still a country which is hugely diverse. The metros are still only one segment of this country. The rest of the country went from being non-digital to mobile first, while the rest of the world went from non-digital to internet to a couple of phases and then mobile first. The jump has its own repercussions in terms of cybersecurity, in terms of safety, and as we have seen recently in terms of frauds, in terms of credit losses, and you have seen the recent Karnataka and Tamil Nadu bills around this, around lending. So I think the emphasis in the next few years has to balance the immense growth opportunity, which is what has given rise to the growth of fintech, versus the risks of a country like India, and arrive at a balanced growth which factors in security and on all fronts: information security, cyber security, customer security, and arrives at an experience that the client can derive a safe, optimal value out of. So I think the last 10 years have been the growth of fintech. I think the next 10 years will be, how does fintech, in a responsible manner, uplift India? That's the way I look at it.
I mean, we had a very interesting conversation in the morning. We heard from the minister and Sanjeev talking about how India is getting to become the $600 billion fintech industry in the next 10 years, or probably lesser, about 2030, 2031. And right now we're contributing, I think we're the fastest growing fintech in the global landscape. So huge opportunity there. But I want to pick something up which you mentioned, and Balaji also comes from a great experience of, GCCs. And it's interesting to watch how the convergence of GCC and fintech, how are they converging? I wanted to ask you, how does how do you see the GCC is becoming, fintech from actually delivery hubs to fintech innovation hubs? How do you see that growth happening?
It's a very relevant and timely question, Ritu. And as my friend Bala will know, I've been part of the GCC growth in India for the last decade or so. It's been an amazing journey to see India become the world's GCC capital, 2,200 GCCs, 2 million strong workforce, and absolutely vital to the world's GCC economy. What this gives us is a very sweet spot. And this is a sweet spot experience because I sit at the convergence of those two circles every day in my life. You have the GCC sector, which is growing hugely, and BFSI is a very large part of that sector. Then you've got the fintech revolution in India, which we spoke about, with all the factors that have locally spurred innovation. And the crossover is immense. Now, the convergence has not been fully leveraged yet, because these two sectors, while they are so synergistic, haven't been, I would say, working together to the extent they can. But the opportunity ahead, just look at it. All the world's BFSI GCCs are present in India. All of them have large tech, operations, finance, risk, analytics, modeling, all the teams in India. And we have the fintech community, thousands of talented youngsters, thousands of startups, literally tens of thousands of ideas floating around. How do you converge them to produce value for the world? That's the next step. This is a spot that no other country enjoys in the world. We spoke about China probably in the morning and its fintech story, but China does not have such a big GCC story globally for obvious reasons. So what India has now is the ability to take the locally spurred fintech revolution, take the principles that underlie it, and translate it to a global scale. Some GCCs have already seen the immense opportunity that lies ahead and have put in place structured mechanisms to engage with fintechs. Some of them, and I can't name the examples here, but I know at least a few dozen examples where GCCs have taken fintechs in India, taken the solutions and applied it globally. I think that is still at an early stage. In the next 5 years, I think you'll see a lot more of it. I'll give you just one example from my old company. I was with Citi for 28 years, and we had an annual fintech event where we used to meet a few dozen fintechs, shortlist their ideas, and take them into mainstream production. And some of those products have also gone global. So the opportunity ahead of the 700 odd BFSI GCCs in India and the fintech sector is just immense.
Yes. Yeah, I think the growth story is immense, and it's again interesting that you're sort of talking about how India is kind of taking fintech products globally. And on that note, I actually want to talk a little bit about inclusivity, right? I mean, we are growing by leaps and bounds. Um, the product innovation under the fintech industry is also very large in terms of its portfolio. But the fundamental question, and while I know we are digital first, etc., but the bigger question that I have here is that are we building for India, or are we really, really building for Bharat? Where is the growth opportunity you see in terms of, are we looking at Bharat only becoming digital savvy, which we've gotten to a point, or are we saying that we will educate and make it more inclusive and get India on that, strong fintech map before we start taking it global?
So the India versus Bharat question is a very good one because we are dealing with two very different audiences in some ways. But it's not mutually exclusive. That's a good part. Now, look at the cost of acquiring customers, especially in financially inclusive segments. It's gone down tremendously due to the innovations that first spurred from the metros. Look at the cost of collections. Because of digital collections and UPI-powered payments, today it's possible to run an entire collection engine at a very low cost without a large collection army. So some of those underlying drivers actually structurally benefit financial inclusion. But that's not enough. You have to look at that segment a little bit more carefully. For example, building alternative credit histories, building alternative KYC models, building models that take into account that most of these clients are new to credit, or NTC as we call them. It's not just new to bank, it's new to credit. They've never borrowed before or never borrowed formally before. We have to deal with them in a somewhat different way. So I think the fundamental principle here is take the same products, the same innovations, the same rails that apply in India, but overlay them with what is required to bring financial inclusion to Bharat. And the institution I'm now part of, Equitas, for instance, is very, very strongly focused on financial inclusion. In fact, the main business of the company is new to credit borrowers. So I see in my new company every day examples of how the same technology that is played out in the metros is being transferred to a pan-India scale. But this does come with its challenges. Responsible lending is key because this is still a very, very developing nation in many ways. It's credit hungry in many ways. Responsible lending, both at the underwriting stage and the collection stage, is critical. That's something the industry is still learning to evolve. But is the industry focused on Bharat? Absolutely yes, because everyone understands the size of the opportunity that lies in these markets. And the level of underpenetration there means that the next 10 years we'll see mostly focus on the inclusive segment rather than the somewhat over-penetrated metros. That's what I think, Ritu.
Um, my next question actually comes from using, how fintech is kind of growing really fast on the tech adoption side. Your earlier point on the inclusivity side, there is, of course, we are battling a lot with cyber crimes, etc., on a daily basis. The tech, but we also in the earlier sessions were talking about how personalization has really helped to get to the consumer faster. Uh, my question is, how do you think, while AI is the cutting edge, it's become a horizontal, and fintech was one of the first verticals to actually pick up blockchain, and they were that was the first use case. I think fintech was the first use case under blockchain. So how do you think tech is really sort of changing the landscape of fintech? And I'd like to ask you a twofold question: advantages and disadvantages of both. Where do you see could be the leakages? And of course, we know the advantages of AI, but it'll be nice to understand from a industry specific use
See,
case.
this is now quite well embedded over a few years now, and some use cases are very clear and very evident across the industry. Customer servicing, for instance, is a straightforward use case. Transaction monitoring, especially with the growth in transaction volumes, can no longer be done without sophisticated ML models. And it's working reasonably well. Real-time fraud prevention, real-time pattern detection, anomaly detection. That's one area. The other is client servicing. The third is credit scoring. So there are multiple use cases that are built out very nicely across the whole sector. And I would say almost every major institution has some level of AI ML at play in these core processes. And benefits are certainly visible. I would say also, though, beyond the areas of client service, transaction monitoring, and credit scoring, I'm yet to see widespread adoption of AI and ML in other areas in the banking sector. So, yes, some areas are well embedded, some use cases are still emerging. I do think in the banking sector in particular, it's a very tightly regulated sector, and trust is core to this sector. So, evaluating the risks and the implications of AI ML is super critical rather than looking at speed of adoption. So here, speaking as a banker with close to 3 decades experience, I do think AI ML has an immense opportunity for banks in India and the whole financial sector in India. But each use case has to be evaluated very carefully from a security and a client perspective. And if it takes a little bit more time, that's the implication of being in banking. But I do see the next family of use cases revolving more around hyper-personalization. You spoke about personalization. That's easy. Hyper-personalization, the next level, is a little more difficult. Personalized recommendations, for instance, investment recommendations, these are still emerging. They're there, but they're not widespread yet. I think the next focus will be not so much on the bank's needs, which is what drove the first 3 examples I gave you, but more the client's needs.
And I'd love to see how that pans out, considering with our large 1.3 billion population, and fintech is or rather, we all deal with finances. It's as basic as that. Which leads me to my next question on design, delivery, and speed. Right. So one is design-led thinking has been often sort of spoken about in the fintech industry. But what do you think it takes to deliver products which are smarter and faster to the consumer?
The fintechs in India are much less regulated than the banking institutions or NBFCs. So there is a sweet spot they have where you can have an idea and take it to market literally in a few months. Now, of course, the sector will get more and more regulated. That's going to happen. But right now, there's a sweet spot on translating design to user experience very quickly, and I think fintechs do it extremely well. But you also have to zoom out a little bit. Unlike an Uber takes a single problem. How does a customer hail a taxi ride? And solves it beautifully well. Most fintechs also do the same thing. They take one problem and solve it extremely well. That's the nature of innovation. But just zoom out to the customer and the bank. There are multiple use cases. So connecting that particular problem into the larger picture and making it seamlessly integrated with the delivery to the client is critical. That's where I think there are still some gaps in the way it's delivered. Because fintechs in isolation typically solve specific problems. Banks typically look at wider delivery to clients. So, yes, design, thinking, quality of delivery, speed to market, these are all advantages, being less regulated. But to truly achieve scale, seamless integration into the bank or the NBFC's offering is important. Standalone fintechs obviously may not even look at embedding into a bank or an NBFC. But by and large, I think the next few years will be about holistic customer experience rather than specific problem statements. And the world of APIs today makes it possible to deliver in a holistic way, even with multiple solutions, but in a very seamless way to the client. I think that's where the next 2 or 3 years will be focused on and building seamless, unified client experience.
Okay. My next question is a very, natural segue into, according to you, in the next 3 to 5 years, what do you see the future fintech stack to be? And what is it that really excites you the most when you think about or when you talk about it?
It's difficult to predict. That's how fast moving this domain is.
Yeah.
And some things are predictable, though. Hyper personalization is predictable. It will happen. Cloud scalable architecture will happen. All the use cases I spoke about earlier will get more refined. These are predictable. But I think what is going to be interesting really is concepts like embedded finance. Where does it go next? Embedded finance was a new concept 7 years ago. Now it's pervasive. We don't even think about it anymore. So I think the next level of how do you structure products, how do you move away from the traditional concept of bank, credit card, bank account, credit card, PL, etc., to more flexible financing options will be important. But beyond all this, I would say for me, the biggest concern would be how does the industry self-regulate to make it far more secure and safe for itself and for clients. I also think the regulators will need to figure out a unified regulatory approach to fintechs. Because right now it is a bit fractured. You have the RBI on the banks, you have SEBI on markets, you have IRDA on insurance, you have IFSC coming up for international banking. You have to bring a unified regulatory interface together for fintechs because otherwise it's very difficult to regulate this sector. So I do think that area is going to cause a lot of attention in the next few years to come. For example, a unified regulatory sandbox does not exist today. They're all individual sandboxes. So you can't do end-to-end regulatory testing. So I think the focus will be not necessarily just on innovation and client experience, but on security and regulatory aspects in the next 4 or 5 years.
Super. We've just finished, but I want to have one last question. What is the advice you would give to a new fintech founder over here, considering how the industry is moving? We've spoken about innovation, we've spoken about inclusivity. What do you think is that quick advice for a new fintech founder sitting out here in the crowd, battling today's climate?
I'm sure there's lots of good advice that other speakers can give you about how to scale up, but I'm going to restrict myself to just 2 observations. Be very much in tune with the regulatory environment, because I've often seen innovation come first and then regulatory compliance afterwards. But be very much in tune with the regulatory environment from day one. And second, everything you do, bring it with a culture of cybersecurity embedded into it. India is a market which will face immense challenges on this front, in my view, in the next 4 or 5 years. So focus on, be ahead of the curve. The innovation part is known. Scaling up is a known thing in India. But how do you stay ahead of regulations and cybersecurity to be a trusted partner? That's the key, I think.
Fantastic. Thank you so very much. This was such an insightful session. I hope you had some great takeaways for the audience. And looking forward to, please, I think Mr. Balaji is around. Anyone wants to kind of get in touch or have specific questions can catch him outside before he takes off again. And thank you so much for being with us today. It was a great conversation.